for sure. So, what are you seeing, Rory, then in your situation right now? I know I've heard that there's some issues or concerns around the FHA loans, VA loans, so that government type stuff. I've heard potential issues with down payment assistance programs. So those are some categories, that maybe are affecting more the first time home buyer and maybe some move up buyer range, price range type people. So what are you seeing there? What do people out there need to know?
No, that's precisely it. And really, like, the industry as a whole, hates uncertainty. It hates not knowing, and they speculate interest rate, they speculate everything. And so, one of the things that I felt has really differentiated me from a lot of other lenders is I put 100% empathy in that transaction, that client, whatever they're going through. I put myself in their shoes and try to get through it. And there's just been changes every single day. There is, one day we're hearing, like you had mentioned on the down payment assistance, one day we're hearing that they made an adjustment to this, and literally the next day they're calling and saying, wait, now we changed it, now it's this. And so trying to keep people informed and trying to keep the emotion in check has been a challenge for sure. So to answer your question specifically on the FHA government side of things is, they can't necessarily go in and change guidelines overnight. So what they do is they change a thing called overlays. They add overlays to prevent risk. So really the housing stimulus plan, the intention or the stimulus plan for this coronavirus or COVID-19, the intention was to help people get through these times. And believe me, I'm getting calls from past clients saying, hey, I trust you. I really don't know what I should do. Here's what's going on. So yes, there's an absolute need for it, but how it's affecting a lot of these loan programs is a lot of people don't know what that's going to mean. And, a servicer, a company that's lending money is now not certain whether they're going to get paid back for the first 12 months, or they're not sure, necessarily how long, even if that person has a job now, how long can they keep it, and how long will we be shut down? Will we be quarantined? So with that, they're really adding additional overlays that are changing, by the day, like I said. So, before we would do one verification of employment. After, we've gotten the initial one, that's 10 days prior to closing. Now they're asking for them an additional one 2 days or 3 days prior to closing, which, as we all know, like, people are working from home. It's harder to get a hold of these people. So there's more challenge, and it's more important to communicate at a higher level with our clients and with our agents.
Okay. All right. So just more overlays is what we're hearing. And then what about credit score? That was the other thing I heard recently, that even they're looking at and, maybe honing in on having to have higher credit scores for those types of loans. Is that accurate in what you're seeing, or?
Yes. And that's really, it's investor
Again, maybe
specific.
there's a case by case basis. Is maybe this isn't just a broad stroke answer here. I understand that too. So.
It is. And, even like, I've, to keep, as of right now, I'm an advisor. I am someone who's helping individuals, and not necessarily am I ever going to put my reputation at risk for one transaction. So I'm actually contacting people I network within the industry to see what they have available and what options I can present. So if a client calls and has a need, I can place them with someone who has that option available to them. And I'm getting calls from people saying, yeah, we can do it. And then the next day they call back and say, you wouldn't believe it, I just got an email saying we can no longer do that credit score. So each individual investor is adding different overlays as to what credit score requirement they're going to have or need. As of right now, I would just say plan for having to have a 660 credit score to really get anything available. I do think and know that it's going to come back. I mean, they're going to correct this. They're going to have options for those people. It's a kind of I would think a temporary thing while everybody's kind of going through this and we're getting through this uncertainty. But as for right now, yeah, I mean, there are changes made to the credit score. There's changes being made to everything as of today. Like, we got an email yesterday about self-employed income. They're making changes to that because people who are self-employed are going to have a direct impact from this. They're going to have to. So they're factoring that in and no longer averaging it over 24 months or 12 months.
Okay. All right. And then next question, last question that I have is, can you touch on forbearance, deferment, and what does that mean for homeowners?
Yeah, absolutely. That's a great question. And you know, I'm having people reach out asking about that. And as of right now, the intention is to help people, obviously, but there's also like side effects, and you know, customers needing to be informed on what it actually means. So, you know, keeping it very simple. Let's say your mortgage payment is $1,000. You request forbearance, it's granted to you. You get 6 months of not having to make payments before this is revisited. Well, after that 6 months is up, that investor or servicer is going to say, okay, I need my 6 grand, you know, for the last 6 months. And actually, it'll be 7 because we need next month's payment too. And so for a person who's going through a hardship, it's going to be an even additional or greater challenge to pay a lump sum. So what's going to happen is they'll end up doing loan modifications and things to help with that. But even with the loan modification, they may spread that out over 12 months or even 24 months, but then taking $6,000 dividing by 12 or even 24, it's going to be a challenge for someone who's used to having a payment at a certain amount. I think it will get corrected. I think that they'll do some modifications, but that's how it sits now. So, you know, if you need it, absolutely use it. I mean, they'll get it figured out. But if you don't, and you can create savings in other ways by like not going to Starbucks or not doing any, you know, some of those other things that do that to save that money to make that payment, because it's going to put you in a little bit, it's going to put you in a tougher position. You know, because I've got people that are like, I already requested it just in case I have any issues. I'm like, try not to do that, because there are certain people who really need it. And if you're not one of those people now, try to avoid it.
Yeah. Okay. Well, this is definitely great information. I appreciate you sharing it.